Hello friends, welcome to yet another video of Ichimoku Cloud tutorial series, and in this video I will discuss with you the second strategy of Ichimoku Cloud, which is called moving average crossover strategy or bullish crossover strategy. So in the previous video you understood the cloud breakout strategy and the cloud breakdown strategy. So if you have not watched that video, I will share the link to this video somewhere at the top of the screen. And now we will talk about the bullish crossover strategy. So basically the bullish crossover happens when Tenkan Sen, which is the blue line in the Ichimoku cloud, crosses above the baseline, which is the red line, also known as Kijun Sen. So this is exactly what is mentioned here. So basically when the Tenkan Sen crosses the baseline, that is Kijun Sen. So it is called moving average crossover or even golden crossover. So let me show this strategy, explain this strategy on some recent chart example. So I will use the chart of Motilal oswal. I will show some other examples as well, but this is the same chart I am using, which I used in the cloud breakout. So in the previous video, like I showed that on 1st April, it crossed above the cloud. But if you see that just one day before, the Ichimoku crossover, bullish crossover happened. How? So if you look at here, let me zoom the chart. So the blue line, which is Tenkan Sen, it was previously below the red line, but now on this 28th March, it crossed above the red line. So this is where the crossover happened, and it was in many cases it happens, but here it was a very good sign that within very next day, along with Ichimoku crossover, the cloud breakout has also happened. So this was the confluence of two bullish signals at the same time, and that's why the price went so high in such a small time. And still, if you see, on Friday it made such a strong bullish candle on 19th of April, and it is likely to go high further. But the point is that when two Ichimoku signals come within a span of 2 days, then this is what is likely to happen, and this is exactly what has happened. So coming back to the Ichimoku crossover strategy. So what you need to do is, you after the crossover happens, you can either enter immediately or you can wait for the retracement. In this case, there was no point of retracement because within the very next day, the cloud breakout happened, and you can. This is the maximum retracement yet that you got for the entry, and the risk reward will be pretty much same because after the crossover, a very smart trader would have entered it here. So the risk reward in that case would have been even better. So he would have entered somewhere here on the next day open, which is on 28th the crossover happens, and on next day somewhere here he will enter, and he will place the stop loss somewhere here. Like he can place it here below the previous day low, or like in the recent low was this, and this was like very strong we can see in the 27 May candle. So place the top loss below it. So in this case, stop loss is hardly 2.26%, and the target will be pretty much same, which I showed in my previous video as well. So same, but the risk reward here will be 11.76. Under the cloud breakout, it was 5.5, but now it is harnessed to 11.76, which is huge. Target of 26.64% and stop loss of just 2.25%. Now, these are the kind of solid signals which we get from Ichimoku Cloud trading strategies. This was very, I should say that a very good situation, because two Ichimoku signals came at the same time. I'm not saying that it is rare, because it does happen a lot of time, but these are high probability trades, because you get two strong signals from two of the best Ichimoku Cloud trading strategies. So now quickly go to another example. So here, in case of, okay, I'll show you example of, yeah, this is a interesting example. Let me hide this for a moment. So this is a Bharat Electronics bell, and this is where the Ichimoku crossover happened. If you see, the blue line Tenkan Sen was below the red line, and here the crossover happens. And here, if you see carefully, both the Tenkan Sen and the Kijun Sen, both the candles are, they are, facing high. They are going like this. The slope is very high. They are going up like this, both the candles, if you see. So I have mentioned something on those lines in my blog as well. Steeper or sharper the crossover, stronger the trend. So in this case, the crossover was steep, like the red line was going up and the blue line was going even further, more steeper and further up than the red line. Both the lines were going up, but the blue line was ahead of the red line. So this goes to show that it is a high probability trade and price is going to get a huge jump from here, and this is what exactly happened. So in this case, uh, one should enter on the next day, which was again because of the high probability of the signal. The price opened gap up on the next day, and it never looked back. Like from here, 213 to 237. And I would like to mention that from 15 April to 19 April, the price hardly went down, because it has the base of such a strong Ichimoku trading signal. Despite the major negative news which came along the fight between Israel and Iran, and the Mauritius tax treaty which has been announced recently, and which is very negative news, and FIIs has been continuing with the selling from last 3 days, and the inflation data of US was very I should say very bad. The inflation is higher than the expectations. So as a result, the interest rates are likely to remain high for a longer period of time. And the Fed chairman, Mr. Powell, has spoken something on the same lines recently. So because of this, the global markets have been falling badly in the last few days. But if you see, Bell has hardly fallen, because it is coming from a very strong Ichimoku crossover strategy signal, and price is refusing to fall. And if you can see, it has recovered on Friday. Even on Tuesday, there was like a doji kind of candle. On Thursday, Wednesday was a holiday, but on Thursday, the price came a little bit below, but on Friday the price pulled above the Thursday's low. So although in this case my both the targets have already been hit, this was my final target and this was my partial target. Both the targets have been hit, and if I show you the risk reward, I mean this candle was quite big, so risk reward was not great, but still 1 is to 3.11 risk reward, and it can go high further. So some of the traders who are who have the I should say the mindset to hold the trades for a longer period of time, they can do it. And another way to trade Ichimoku crossover strategy is you buy here and you keep trading the stop loss, because in this case there are two supports, either the Tenkan Sen or the Kijun Sen. The price is likely to get support here, like it got in this case. Like here it got the support from, let me hide it for a moment. So on 15th of April the price got support from the Tenkan Sen, and on 19th of April price went below it, but it closed above the Tenkan Sen. So clearly it is getting support from the Tenkan Sen, which fastest moving average line in the Ichimoku structure, and it goes to show that the price is likely to remain bullish for the coming days. And even if the price breaks it, it is highly likely that price will get support from the baseline. Now I will show another example in which price got support from the baseline after Ichimoku crossover. So here it never reached the at the baseline, but after Ichimoku crossover, my idea was that to if I missed the entry, because this was a very, after Ichimoku crossover, this was a very long candle and it was not making sense to enter here because the risk reward was not optimal. So my study was to let the price come back to 50% retracement of this move, which was somewhere around here, and then you can enter. So after that, the prices started closing above the baseline. Let me search for some other examples on the same lines. MCC is one. Yeah, this can be a very good example. See, the crossover happens, but in this case, the crossover not was as steep as in the case of Bell, because the baseline was flat, but the blue line was closing clearly above it. So here the crossover happens and price goes above, but it was not like a huge move and price started coming down. Now, if you see, after the crossover, price came till below the baseline, which is also the 50% retracement of this move, this entire bullish leg. Its 50% retracement is here. I have already marked. If you want, I can show it again. So I am using Fibonacci retracement, and this was my move. And if you see, the 50% retracement is here, and this is the 60% retracement which I have already marked on the chart. So on the 50%, so this baseline is in confluence, it is overlapping the 50% retracement. So this confluence here goes to show that price is likely to get support here and go higher from here. So if you are if you are looking for a trade, you may enter here. Based on, you can analyze your risk reward and take advice from your financial advisor as well, because this video is not a stock recommendation. It is for education purpose, for learning purpose. So but this is a very because retracement of 50% is very likely to give support, and price is likely to go ahead. So my point here of showing this chart was to show that the price is, in case of Ichimoku cloud crossover, if you miss the entry in the after the crossover, you can wait for the price to come back to the baseline, and it gives you another opportunity to enter the trade. So this was the Ichimoku cloud bullish crossover strategy. And if you want to, there is a corresponding bearish crossover strategy as well. Just like we had a cloud breakdown, we have a bearish crossover strategy, and it happens when the blue line crosses the red line from above to below. Like in this case, it has happened, but I will show you a better example. Yeah, this is a very good example. Like here, you see the blue line was above the red line, and it crossed the red line and it went below it, and both the lines are, although red line was like flat for a couple of days, but then it also went down. So both the lines were like going sinking down like this, and this is a very good example of a bearish crossover. And after, like, on 7th of May, the crossover has happened, and after that price tried to come up, but it didn't even went above the high of the 7th May, and it went down very sharply. If you see, price went so sharply down, like after the crossover, is okay. If a person will enter at a little bit of retracement, he will enter somewhere here, and it went 17% down within a matter of 3 days. These are the kind of strong signals which these crossover strategies of Ichimoku are likely to give. So again, the like I said, the steeper the crossover, in this case also, the sharper, the more strong and sharper crossover, like the candles are going at a very strong downward slope. So the signal is stronger, and it is likely to, hit the targets in a faster way. So if here, from here, we see the previous low was, this was the first previous low, and below this, this was the second previous low. So this target was hit, target of 310, which I am taking based on this previous low. This was hit within the matter of 3 days. 19% fall within 3 days. It is not a joke. And if we see it from the point of view of risk reward, okay, this was the crossover, and someone enters somewhere here and places the stop loss above the candle on which the signal came. So the crossover signal came on 6th of 7th of March, and I am placing my stop loss above that candle. 7th March high was 378.5. I am placing the stop loss at 380.85, which is significantly higher, and my stop loss was 4.23%, and my final target was this, which is 310.85, which is 14.93%, and risk reward was 3.53. I took a conservative way, and I placed the stop loss suitably above the long bearish candle to stay safe, and still it gave me a very good risk reward ratio of 3.53. And if we go further, like, I mean, it is better to stay here, not be too greedy in trading, but more, I should say, whose risk appetite is strong and who is more optimistic, he could have taken even like 3.84 risk reward as well. But for me, or for most traders, I should suggest that the risk reward should be somewhere here. So these were the two strategies of Ichimoku crossover, also known as the bearish crossover strategy and the bullish crossover strategy. So if you want to read this strategies in detail, you can go through my blog, and I have shown with example here. I have taken ultratech cement example for showing the bullish crossover, and for bearish crossover I have taken example of some other chart, which is Reliance Industries. So here, as I told in my previous examples, here the cloud breakdown is happening, and moving average crossover indicating beginning of down. Here the Ichimoku crossover has happened. The blue line went below the red line, and here the crossover happens and price went from here to here. So, and this was the target, like, because this was the previous low, so target was here. So such a strong move using Ichimoku bearish crossover strategy. So you can I will share the link to my blog in the description. If you want, you can read my blog as well. It has given in the description, as given in detail. So if you are enjoying this video, and if you got some value out of this video, do like it, please share it with your friends and family and your colleagues, and don't forget to subscribe to my channel. And this is the motivation for me to make more such videos. Earlier I was not able to make a lot of videos because I was not able to give enough time, but now I have a sufficient amount of time, and I'm coming out with a lot of great content, and this will definitely improve your trading. So thanks for watching, and if you have some queries, if you have some suggestions and feedback, feel free to share with me in the comment box. Thanks for watching. Bye bye.